Hey, what's up, everybody? It's Doug Shoemaker here with a market update for Friday, May 2nd. Now, whether you call it strong or just better than expected, this week's economic reports actually came in a bit hotter than the markets were ready for. And that actually pushed mortgage rates just a little bit higher. Now, interest rates tend to follow what's happening in the bond market, and bonds are always watching economic data really closely. But now and then, the market kind of shifts its focus. And that's pretty much what we think we saw in early April when traders were caught up in all the tariff related headlines. Now, a couple weeks back, we actually noted that economic data was actually starting to matter again for rates after the S&P manufacturing PMI made waves. Now, fast forward to this week, and now it's ISM's version of pretty much that same report that's making an impact. Now, to be clear, no one's actually saying that the ISM report was great, but it definitely wasn't as weak as people had feared. Now, a few parts of the report actually showed some surprising strength. And to make matters worse for mortgage rates, pricing pressures are still sticking around. Put simply, the market was hoping to see some signs that the recent trade drama was starting to slow down the real economy. Now, that kind of weakness usually leads to lower mortgage rates. But when the data didn't really back that up, rates ticked higher instead. So Thursday's reaction was fairly tame, but things picked up a bit more on Friday when the monthly jobs report dropped. Even though previous months saw some downward revisions, job growth still came in stronger than forecasted. And not only did the unemployment rate stay put, it did so while more people jumped into the labor force. So, taking together, Thursday and Friday pretty much completely wiped out the drop in the Fed funds rate expectations that we saw over the prior 6 trading days. Now, on the plus side, this does not signal any major shift in the bigger picture. Yields on the 10-year Treasury note, which we often use as kind of a benchmark for long term mortgage rates, they're still sitting in the lower half of the range that we've seen since October of last year. Now, mortgage rates are basically in the same ballpark as last Thursday and Friday, but more lenders are slightly higher than they were last Friday. If you've seen headlines claiming that rates dropped this week, those are likely based on Freddie Mac or MBA survey data, which didn't capture the late week increase that we saw on Thursday and Friday. So, hey, I hope you found this information useful. Check back often for more updates or subscribe to my weekly newsletter. And don't forget, if you're military, law enforcement, or a firefighter, the Shoemaker Loan Team has a program and price through the Home Foundation, which stands for Heroes of the Metro East, which will save you thousands on your next home loan. Even if you're not military, law enforcement, or a firefighter, you're still going to benefit from the same process that we built for our local heroes. Now, if you or someone you love needs some good, honest advice, please reach out today. We won't bug you to do something before you're ready. We're not going to sell you to a bunch of mailing lists. We just want to make sure that we're here for you how you need us to be whenever you are ready.